sector, specializing in assessing corporate clients' worthiness. She holds a DBA from Westcliff University and a master's in finance from Orléans University. Her expertise contributes to enhancing bank portfolios and profitability through informed credit decisions. And I'll hand it over to our presenter.
Okay, thank you. Good evening, everyone. Today I'm going to present the article of Determinant Factor of Corporate Creditworthiness, and it's a case study of corporate client in the Egyptian banking sector. It's an article written by Dr. Kate Andrus and myself, and I will be the one who will present the article for today. So let's start with a brief introduction about the role of the banks in general. Mainly banks are offering financial services for individuals, which are people like us, and for companies. And in banks, we call them corporate clients. And the main product offered to companies is loans to help them to running their businesses through acquiring production lines or purchasing raw material for running business. And the loans are one of the main revenue stream of banks. And these loans are associated to a risk, which is the credit risk. The credit risk is simply the inability of companies to repay back the money they obtained from banks. And so the credit risk can make banks make losses, financial losses, if the companies are not able to repay back the money. And then they can make credit losses, then they can threat their business continuity. So that's why each and every bank needs to have a credit assessment process inside the bank in order to mitigate the credit risk and to make a good credit decision and avoid the occurrence of financial losses. However, the credit risk assessment itself is associated to many challenges. Today, we will focus on the Egyptian banking sector. So the Egyptian banking sector faced a lot of changes through the last decades, starting from economic challenges related to the revolutions in 2011 and 2013, then the devaluation of the currency of the EGP, or the Egyptian pound, in addition to the other conditions like the COVID-19 pandemic and so on. All of these conditions affected the ability of the company to repay back the money to banks. In addition to other challenges related to the banking sector as well, such as the fierce competition between banks in order to acquire market share, in addition to regulation of the Central Bank of Egypt, and challenges associated with specific sectors such as small and medium enterprises. Because of their small size, they are more vulnerable to shocks and more associated to credit risk. So to summarize the problem of the article is that the credit assessor are facing challenges in their jobs as they are assessing the creditworthiness of client in an evolving environment, and then that can increase the non-performing loan and increase the bank losses. So the study is focusing on determining the main factors the credit assessors are looking at it in order to assess the clients and decrease the probability of default of the clients. And so when we focus on important information, we can help credit assessor to make timely and accurate credit decision. And then the study will distinguish between two sides of companies, the large companies and small and medium enterprises, in order to distinguish the difference in assessment. The base of the study is the asymmetric information theory. In a brief note, the asymmetric of information theory is when we have two parties, the seller and the buyer, and definitely the seller has more information about the product he sells, so he can hide important information, and then the buyer can make wrong decision. Same thing is applied to banks. Banks may not have a full picture about the company if the company hide important information. So the bank can make wrong credit decision when decide whether to proceed with the company or not. And the asymmetric information is also linked to the size of companies. So when we have small enterprise, this size of companies are tend to hide important information in order to have access to the money. So here the problem of the bank, it needs to, when what we say, to have a rationale or credit rationale based on the available information on hand. And these information are mainly financial information and then non-financial information. The financial one are the factors or the figures extracted from the financial statement of the company, such as the figures of the sales, the revenue, the capital, and so on. The non-financial one are the industry, the management, the guarantees the bank can take in order to grant money to the company. So the research questions are mainly three questions. The first one is to determine the factors that have a significant impact on the creditworthiness of large company. The second question is the same, however, it's related to small and medium enterprises. And then a comparison between both sizes is done in order to detect the similarities and differences. So it's a qualitative research and it's a case study because it's based on the real experience of credit risk assessment assessors who are working in the Egyptian banking sectors. And we have a population, our target population is the credit risk assessor of large companies and credit risk assessors of small and medium enterprises. And to give you a brief definition of small and medium enterprises in Egypt, it's the companies that hire or that have less than 200 employees and have sales less than 200 million Egyptian pounds. So our participants are mainly the risk assessor, and we ask them through interview to ask them how are the financial factor or the not financial and non-financial factors they are focusing on when they do their assessment. And the data are analyzed, and we detect pattern and relationship and common answers so we can present our results. So I will move to the findings to have time to elaborate more about the factors. So starting by the large company creditworthiness, the study revealed that they have different category of financial factors, mainly the liquidity one. And these factors such as current ratio and quick ratio and component of the inventory are the ones who assess the company's ability to repay back its financial or liability through the short term. And when we say short term, it's mean one operating cycle, and normally it's 1 year. Then we have solvency factors such as the leverage, the gearing ratio. These factors are measuring how extent the company is capable to meet its obligation at the long term. So here we are assessing the liabilities of the company, the debt of the company, and whether the cash flow of the company is capable to cover its financial cost. Then we have the profitability factors to measure whether the company is profitable or not, whether at the level of the activity itself through the gross profit margin, which it measured how the company managed the direct cost. Then we have the net profit, which is the bottom line of the company, and they analyze also the income, the component of the profit itself, whether it came from the core activity or from other sources. Then they mentioned also the operational activity factors, which mean they assess the cycle of the company itself through how they manage the inventory, how they manage the receivables due from the customers, and how they manage the payables due to suppliers. Then the cash flow, which is the cash flow generated from the operation of the company or generated from financing or investment resources. Then when we move to non-financial factors, they assess the ownership, which means who are the owners of the company, are the owners involved in the activity or not, they have experience in the field or not. Then we have the management self of the company, and whether they have a vision for the company or not, the existing of second line of management in order to have succession line. As well, there are credit documents. Credit assessors are looking at it, such as financial statements, as we already said. And we have the investigation reports, as each bank has an investigation department that investigate about the company, whether it has a good reputation in the market, how it deals with other banks, how it deals with customers and suppliers, and so on. As well, there are documents or reports generated from the Central Bank of Egypt, system of the Central Bank of Egypt, that can give more insights about the amount or the debts granted from other banks. And we have another document, it's I-score, which is a document that gives a score for each company that reflects its capability to repay back its debt. As well, another aspect is the facility structures document, which refer to the product that the bank will offer to the company, which product, which amount, and tenor, whether it's short-term or long-term credit facility, what are the guarantees the bank will take from the company, and how the money will be disbursed and how the money will be repaid back. Last aspect is the external factors. Definitely, assessors are looking at the condition that surrounding the company, such as the industry, what are the factors that can affect the industry itself. We have major events such as the COVID, the devaluation of the currency. All of this can affect the creditworthiness of companies. Then let's move to the small and medium enterprises. And for the sake of time, I will go to the comparison in order not to repeat same things for the small and medium enterprises. I will do the comparison, and here we can detect the similarities and the differences without repeating same things. So we have the similarities between both companies. We have common financial factors such as the current ratio in order to, as I said, to measure the capability of the company to meet its current liabilities or current obligations. We have the leverage, we have the assessment of the cycle, of the operating cycle, such the receivables, the payables, and the inventories, and so on. Other common non-financial factors related to the management, second line of management, related to the documents used in the assessment, such as the investigation report and the reports generated from the Central Bank of Egypt, as well the facility structures terms, such as the product offered, the tenor, the source of repayment, and the guarantees, and so on. And as well, the external factors, the common factors assessed by all credit risk assessors. Let's come to the differences between both family of companies. We have the main difference is that the large companies assessor are giving a high weight to financial factors. They do a deep analysis for the financial statement and doing a deep analysis for the figures. However, for small and medium enterprises, they do not rely on financial figures. Why? Because small and medium enterprises have more or less a lack of transparency. They may present a figure that are not accurate or they are not correct. So the assessors are not relying on the financial or they don't give high weight to financial. Other differences is when we ask the credit assessors which are the most important non-financial factors that are looking at it, they said the management and the ownership. However, for small and medium enterprises, they give high weight to the credit document and how to check and to prove the activity. As we said, that the small and medium enterprises have a lack of transparency, so credit assessors are doing a great effort in order to prove the number of sales and the costs through invoices, through bank statement, and so on. Other main aspects is that the large companies assessors are evaluating the management and the ownership in a separate way, because normally the large company has a separate ownership, can have an ownership that is totally different than the management team. However, for small and medium enterprises, usually the owner is the manager. So here, for small and medium enterprises assessors, they look at both aspects as one aspect. The other thing is that for large companies, they don't require a lot of documents. However, for small and medium enterprises, they require a lot of documents to check the activity. And last point is that for support and guarantees, the large companies, they do not require a lot of guarantees and a lot of collaterals from the large companies. However, for small and medium enterprises, they give a great weight to support and guarantees in order to protect the rights of the bank. Last point here, the application of the article. This article can help credit assessor to focus on important factors so they can give equality and timely credit decisions, so they can in turn reduce the non-performing loan. As well, the factors or the findings of the article can be used as an internal risk rating model, and each bank can give a weight for each factor based on the policy or the appetite of the bank. As well, it can educate companies about how the bank can assess them or can um, study the file of the company so they can take care about the most important points to when they present a demand for a loan from a bank. And I want to thank you. And if you have any questions.
Thank you very much. Appreciate it. Any questions? Okay. All right, we'll adjourn for this presentation. I thank you all for attending, and we'll take a question. Jay?
Yeah, I was wanting to ask. So then, what time do we come back again?
Looks like we're back in here at 8:15.
Okay, all right.
Yeah, we
Good,
got a
thank
big
you.
break here.
Okay, all right. Thank you.
Thank you, Professor. It was a great
Thank you.
presentation. Very interesting.
Thank you.